Now, Part D of the tax return has to do with Schedule E, or employment and pension income. And all of this information, Revenue have it in their computer anyway, because the way that the return tends to be pre-populated now. So you will see if you have an employment, or the client has an employment, the gross income, the source, and if it's not, you have to declare it and make sure it's there, whether it's an employment, a directorship, a pension, or an ARF, an approved retirement fund. The tax and the USC deducted has to be there, and week 53 relief, if you're claiming that, you have to mention that. That's essentially where you get a little bit extra of a tax credit because of the fact that there's 53 weeks in the year rather than 52. Now, the SARP relief, you need to, special assignee relief, you need to declare if you're actually claiming that. And for those of you who are interested, Revenue are quite sticky on claims for SARP relief, and there's been 3 tax appeals already this year in relation to that. And if you happen to use our AI system, Azilia, you can ask now, you can ask the bot, have there been any tax appeals in relation to SARP in 2023? And Azilia will happily tell you and give you little details of the claims. But essentially, SARP relief is a relief that's available to people coming to work in Ireland from abroad, from an employer abroad, coming to work back in Ireland, and then they can get a significant reduction in the amount of income that's taxable. And it's line 228 in the book, goes into the detail on it. Now, the other important thing here is the surrendered R&D credit. It's a handy way of giving a tax-free benefit to an employee. If the company incurs R&D and has R&D credits available to it, the company can surrender some of those R&D credits to an employee who is essential to the work of the company, not just any employee. And if that happens, it's a key employee, it's called, then that credit can be used by the employee against their tax. So, for example, you might use this if you had a key employee and the key employee had a significant BIK liability and the company had surplus R&D credits. You could give the R&D credit enough to cover the tax on the BIK. But the most effective rate you can get for surrendered R&D credit is 23%. Now, you also have to include foreign tax if you've paid foreign tax on the employment income, so you can get a credit on it if you're due it.